PLTR stock is undervalued by 42%. Is Palantir stock the best AI stock to buy right now? Hello and welcome back. Today, we'll delve into the intriguing world of stocks and artificial intelligence as we reveal a market hidden treasure. In today's video, we'll look at the intriguing story of Palantir Technologies with ticker symbol PLTR, a business that's been making waves in the artificial intelligence space. We'll look at why some experts say PLTR stock is 42% undervalued and whether it's the ultimate AI stock you should consider adding to your portfolio right now. So strap in for a wild ride of insights, research, and prospective possibilities that could shape your investment journey. Let's get started. Is there an opportunity with Palantir Technologies Incorporated 42% undervaluation? For our curious investors, we're diving into the world of valuation as we take a closer look at Palantir Technologies Incorporated. Don't worry, we're going to break down the complex stuff and make it simple to understand. You see, when it comes to investing, estimating a company's value is like trying to predict the future. And that's where the discounted cash flow or DCF model comes into play. Picture this, we're trying to figure out if Palantir stock is undervalued or not by estimating its future cash flows and then bringing them back to today's dollars. Sounds complicated, right? But it's not as tricky as it seems. Let's break it down. Palantir is a company that helps organizations make data-driven decisions using AI. We'll use a two-stage DCF model, considering a high-growth period followed by a steadier one. First, we'll estimate cash flows for the next 10 years based on analyst projections or past trends. We assume that growth slows down over time. Now, we need to bring these future cash flows back to their present value since money today is worth more than money tomorrow. Taking into account a discount rate of 7.1%, we arrive at a present value estimate. The total equity value, which accounts for cash flows and the terminal value, is about $57 billion. Considering the number of shares, we find that the stock might be undervalued by a whopping 42% compared to its current trading price of around $15.4. But before you jump in, remember that valuations are like looking through a telescope. A slight shift can take you to a different galaxy. Plus, this method has its assumptions. The discount rate and cash flow estimates play a crucial role, so feel free to tweak them yourself. Keep in mind, the DCF model is just one tool among many. It doesn't factor in industry cycles or future capital needs. While it's valuable, don't rely solely on it. So if you're considering Palantir as an investment, dive deeper, understand the risks, and explore other factors that could influence its value. Palantir. This is the inflection point. Now, let's talk about Palantir and their recent Q2 earnings report. Here's the scoop. Palantir's Q2 results hit the scene, and they didn't just keep up the pace, they surged ahead with double-digit growth. What's more, their brand new AI offering has set the stage for some serious expansion. Just a few months after its launch, Palantir's AI platform, known as AIP, is already flexing its muscles with over 100 corporate clients. That's like going from zero to hero in record time. And let's be real, Palantir is gearing up to ride the generative AI wave and carve out a top spot in this tech revolution. Hold on, there's more. The Q2 earnings revealed some impressive stats. Revenues climbed 12.8% year over year to a hefty $533.32 million. Commercial and government sectors stepped up their game, growing by 10% and 15% year over year respectively. Plus, Palantir has been pulling in positive cash flow and securing GAAP profitability for 3 quarters straight. The plot thickens. Despite naysayers claiming Palantir's high software pricing would be a roadblock, the exact opposite's happening. They're gaining customers left and right, with their customer count shooting up by 38% year over year to reach 421. The management's been busy sealing the deal with 66 contracts worth $1 million or more. And if the economy keeps picking up steam, Palantir could be in for a commercial spending windfall, further fueling their growth. Hold up, there's a twist in the tale. Palantir's entered the generative AI arena with AIP, and it's a potential game changer. This tech sector is exploding, projected to hit over $1 trillion in value soon. Big players like Nvidia, Intel, and ARM are all in the mix, developing chips and platforms tailored for AI. Guess what? AIP's like a fresh breeze in the tech realm. It lets organizations integrate massive language models into their processes, making them uber efficient. Palantir CEO Alex Karp spilled the beans. AIP's already working magic for over 100 organizations, and the demand is through the roof. With talks underway for over 300 more organizations to jump on board, you can bet AIP's financial impact is bound to grow. Now, here's the kicker. Palantir's riding high on multiple fronts. Their growth's on overdrive, and their total addressable market, or TAM, is about to go through the roof. Even insider selling's dwindled, and their stock-based compensations are sliding down, showing a healthier financial picture. And there's more. Palantir's all set to join the S&P 500 index after their Q3 earnings report. With this big league move, their stock could get a real boost. Plus, they've just greenlit a buyback program worth up to $1 billion. It's a power move to ensure their stock doesn't nosedive anytime soon. Now, here's the curveball. Some skeptics argue Palantir stock is playing hard to get with its valuation. Yeah, it's trading at a forward P/E of around 65 times. That's like a premium suite in the stock world. But hold your horses because Palantir's growth prospects could outweigh these valuation concerns. Take a look at the big picture. The US economy is on a roll. Inflation's taking a chill pill, and recession's on the back burner. With this economic backdrop, Palantir's chances of boosting their top line look pretty solid. And let's not forget the recent stock dips post-earnings. It's not necessarily about Palantir's performance, but a broader portfolio shuffle. Even big shots like Microsoft took a dip after their results. Here's the bottom line. The Palantir saga's far from over. There's an intense debate about whether the company's premium valuation lines up with their potential TAM. With a quarter of Palantir's clients already hopping onto AIP in just a few months, it's clear the demand's strong. And as more companies adopt generative AI, Palantir's TAM could explode, driving even more growth. Is Palantir the market's best AI stock? This one chart reveals the truth. Are you curious about Palantir and whether it's truly the cream of the crop in the AI market? Well, let's take a closer look. Palantir has been on a rocket ride this year, with its stock soaring about 130% since May, all thanks to the AI hype. But is this rally really justified? Palantir's AI game is strong, especially with its recently launched artificial intelligence platform product. The demand has been off the charts, signing up over 100 clients within just 10 weeks, and there's interest from 300 more. Impressive, right? But did this translate into financial fireworks? Well, sort of. In Q2, Palantir's revenue climbed by 13% to $533 million, just barely exceeding management's guidance. Not groundbreaking, but not too shabby either. However, the real star of the show is Palantir's margin expansion. Despite a somewhat lukewarm growth in revenue, the company's disciplined expense management led to solid profitability. Operating expenses nudged up by only 1% in Q2, pushing Palantir to report its third consecutive quarter with a positive $0.01 per share in earnings. Yet, here's the twist. For all the AI excitement, Palantir's growth didn't quite reach the stratosphere many expected. If AI was truly the game changer everyone thought, Palantir should have been posting much higher growth. As it stands, I'm not convinced it's the ultimate AI stock. Also, let's talk price. With its recent stock price surge, Palantir isn't the bargain it once was. It's trading at about 18.6 times sales. Not exactly pocket change for a company growing at a 13% clip. Even with the hope of a better 2024, where analysts expect 19% revenue growth, Palantir's valuation remains high. And here's the kicker. Management's planning a stock repurchase spree despite the pricey stock. This makes me wonder about their capital allocation smarts. Considering Palantir's youth and the long road ahead, this move seems questionable. So, should you jump ship? Not necessarily. If you're in for the long haul and can handle the market's ups and downs, Palantir might still make sense. Just remember, initiating a small position could be prudent for now. But going all in? Well, the growth needs to catch up first. Stay smart, stay patient, and keep those AI dreams in check. And that's it. We hope you enjoyed this video. If you did, don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one.